The retail sector has been a standout performer so far this year, with the group including several high-profile winners from the COVID-19 pandemic. Not surprisingly, the retail sector ETF is trading up by around 19% so far this year, outperforming the broader market's nearly 10% gain over the same time frame. The group is scheduled to start reporting Q3 results next week. Ahead of their earnings, we'll highlight three of the best performing names in the sector, which have proven that they can successfully compete with Amazon amid the current market environment. So let's kick it off with number one. The first name up is Home Depot. Home Depot shares have been flying high this year, jumping by around 26% so far in 2020 as Americans invested more in their homes, made some more remodeling, some renovation work amid coronavirus-related lockdowns. The Atlanta-based home improvement retailer is scheduled to post EPS growth of around 18%. Revenue, meanwhile, is expected to jump 15% from the year-ago period, thanks to strong demand for its assortment of building products from do-it-yourself customers. Home Depot's e-commerce gains will also be in focus after it reported that online sales soared by more than 100% in Q2. Overall, the largest U.S. home improvement retailer still has many factors working for it in its favor, and that should bode well for the stock going forward in the months ahead. On to number two, the next name we have up is Target. Target has been another powerful performer in the retail sector, with shares up around 23% in 2020, due in large part to rapid e-commerce growth after reporting blowout second quarter results in late August. Consensus expectations call for EPS revenue growth of 12%. Revenue, meanwhile, is expected to climb nearly 10% year over year, thanks to ongoing efforts made by the big box retailer to add faster shipping options and in-store order pickups. Just a reminder that in the second quarter, sales through its curbside pickup service soared by more than 700%. Total e-commerce revenue, another key metric, jumped by a record 195% in the previous quarter. So that should be another key metric to focus on. Overall, there are still so many tailwinds for the company that I don't see them disappointing when it reports results, and it should continue to be a good bet going forward in the coming months. And finally, the last name we have up is Best Buy. Best Buy has thrived throughout 2020, with the consumer tech giant benefiting from robust e-commerce growth. Obviously, during the coronavirus pandemic, the stock is up roughly 29% so far this year. We're expecting another strong quarter from the largest U.S. consumer electronics retailer. Consensus estimates call for EPS of $1.64 per share, rising 45% from the year-ago period. Revenue, meanwhile, is expected to rise roughly 11% year over year. We'll be looking to see if the retailer's domestic online sales can keep up their torrid pace of growth after surging by more than 240% in Q2. Taking all this into consideration, Best Buy should continue to be a solid stock to own in the months ahead. That's all for me for today. Have a good one, everybody.